Hello everyone. I've been asked to explain the different chart types. And you know what? It is very necessary because in all of my videos, I always speak about complex or maybe simple indicators and different strategies. But someone asked me, oh, I don't understand these things because I can't read the charts. Okay, so I'm making this video to explain a bit about different chart types. Let's start with the line chart. Line chart is a simple line which draws a line from one closing price to the next closing price. So all of these are closing price at the end of the specific period. So we are looking at daily charts. So we just drawing a line from closing price at the end of each day. So if you use 4-hour charts or 15-minute charts or whatever, then you just draw a line between the closing price at the end of that period. Okay. Uh, yeah, as I said, when closing prices is strung together with a line, we can see the general price movement of a currency there over a period of time. It is very simple to follow, but the line chart may not provide the trader with much detailed information about price behavior within the periods. Uh, you know, all you know is a closing price. You don't know price movement in that period, how high it gone, and what was the opening price. There are some cons and pros for this type of chart. As I said, uh, yeah, you don't have much information, but because this type of chart is gives you a big picture of price movement, it's good to figure out the trends. For example, now we're looking at Bitcoin price. You can see that, yeah, overall trend is bullish. And maybe if you go back here after 2017, sorry, December 17, we've been in bearish scenario. But now Bitcoin is bullish. So yeah, this is very simple chart. You can use it in conjunction with other uh, charts to maybe just find the best trend. Um, Next chart, let me just change the chart type here. I'm using trading views chart today, so if you press here, you can change it to bar chart. Okay, so bar chart uh, is a little more complex. Not complex, but it shows the opening and closing prices as well as high and low. So if I draw a bigger picture, it will be something like this. Okay, and like this. Okay, so sorry anyway. So what this gives you, obviously this is the low point here. Okay, so here you have low point, Then here you can see the high. Okay? But what are these two? This is the open, and you can see close here. Okay, this on trading view you can see that we have when the closing price is more than open price, you can see green candles. So it means that price gone up during this period. But sometimes you may see that opening price up here, then closing down there, which are these red ones. So the price dropped during that period. The bars, may increase or decrease in size from one bar to the other. You can see we have big bars and smaller bars. The bottom of the vertical bar indicates the lowest traded price of that time period, and that highest is the highest price during that time period. The fluctuation in bar size is because of the way each bar is constructed. The vertical high of the bar reflects the range between the high and the low price. So the bigger the body of this bar means that we have more fluctuation. So just to repeat one more, we have open, the little horizontal line. On the left at opening price. Then we have close, is the little horizontal on the right hand side, which is the close. We have high, the top of the vertical line, which is the highest price of the time period. And we have low, which is the bottom of the vertical line, which defines the lowest price of the period. As you can see, we can have many information from this type of chart. Another type of chart is candles. We have candlestick, which is very popular, and also the hollow candles, as you can see. Hollow candles are the traditional candlestick chart, which is normally when the closing price is more than opening price, the candle drawn as hollow. But when the closing price is less than opening price, it's filled. And so, as I said, hollow charts and candles are pretty similar. The only difference is that I like candlestick more because it's the visualization of the chart. It's a bit more prettier, I can say, and easier to read compared to just the hollow and filled charts. But in terms of the information, candlestick bars still indicate the high, low, high to and open and close prices. So let me just zoom in on one of these charts to explain what's the how you read this bars. So this bottom here shows the low price for the period. This top here shows the high price. And again, we have the open and also we have close. As I said, candlesticks help visualize bullish or bearish sentiment by displaying bodies using different colors. So, if you again zoom out, you can see more green candles, so that means that we are bullish market. And if you see more red candles, then you are in bearish market. And the bigger the candles, the more volatility you should expect. Okay, we covered line and bar and candlestick, two different types, the traditional and also the colored one. Let's delete some of the notes now. Yeah, okay. Next one, let's talk about Renko. I like Renko charts. Renko chart has brick size, the bricks. A new brick is created when the price moves a specific price amount. So there are two ways to calculate the brick size. The traditional way and ATR way. I love ATR because it takes into the account the volatility of the market. At the moment, you can see on daily, the ATR is 3, and the block size is calculated based on the ATR. So normally up brick colored green and down brick colored in red. Some key features of Renko charts is that Renko charts, as I said, are composed of bricks that are created in an angle depending on the brick size. On some platforms, you can see they even draw those ones at 45 degrees, but here a bit more. A brick can be any price size. Any price. You can have brick size from 10 cents, 50 cents, or $5 or $10. So this is called brick size. You can see one brick is showing the change of the price for a specific amount. Okay. As you can see, the time table, the time factor of this chart is not something that we can scale it or we say no. There is no. We have the timetable, but it's not really similar to the other timetables. If you see, for example, here 2019 to 20, and compare it for the last year, the previous year, you can see previous year was longer. Uh, Renko charts have a time axis, as I said, this time axis, but the time scale is not fixed. Yeah, that's the better way of explaining. Some bricks may take longer to form than others, depending on how long it takes the price to move the required box. So you won't see the next block until price moves that much. So the one candle, you can just stay in one candle for days, weeks even. But as you know, in normal charts, you have one candle or one bar for each period. Let's check here to just explain a little bit more. This candle, you can see the date was 30th of November. The previous one, 20th of November, so 10 days. Before that, 17th of November. So it takes 3 days for this one to shape and go to the other one. Then 10 days to go to the other one. So we don't have the same time scale because it depends on what stock. The benefit of the Renko chart is that Renko chart filter out the noise and help traders to more clearly see the trend. You can see the trend here from March 12th of March of 2020. And today we are on 13th of December. So from March to December, we can see one uptrend, which is amazing. If you look at the other type of charts, you see ups and downs, but in the Renko, you see just one uptrend very nicely. So this is very good, no noise. And the other thing about Renko charts is they typically use closing price based on the chart time frame chosen. For example, if using a weekly or daily like that, the one that we use, then weekly or daily closing price will be used to construct the bricks. As I said, Renko charts are designed to filter out minor price movements to make it easier for traders. Focus on important trends. So you shouldn't be worried about too much fluctuation. You can see nice trends, so you're gonna ride. I probably prepare another video to explain more about the strategies for any chart type, but normally Renko traders, if they see a trend reversal, the trend reversal happens when the second block shapes in the opposite direction. For example, here you can see that's a sell signal here. As soon as you see the second block is shaping, you can sell. Then when it goes back up, you close the sell. Again, if you see that it goes second block shapes, then here you sell and it goes down. Or on the other side, the same thing. But I'm not gonna explain too much the strategies. This is already too much, so I'm gonna leave it for another video. The time frame on this trading view is ticking out, so we have other charts as well. So I'm gonna explain them in future. Have a nice day. See you later.